There's a topic that I presented some time back, which focused on fair value gaps or imbalances. Okay. And I feel like most people didn't follow up, and at the same time, most people didn't understand. The ones that really understood were the ones that came and saw me face to face. Maybe it's because I gave them more time, or it's the way that I taught them, it was a bit different. So I'm gonna be talking about fair value gaps and imbalances this morning. Okay, so I'll start by sharing my whiteboard. A fair value gap or an imbalance is a point whereby price is gapped and is to come back, fill that point and mitigate. Right. The reason why we trade these is because they give us the best points of entry, and it's because they give us a little drawdown before it gets into profit. Right. Just by trading fair value gaps and imbalances, you can actually notice that you have more accurate sniper entries. Right. Now, there is a thing that we call healthy price action. Right. And healthy price action happens at any phase of a trend. Either you are going uptrend, either you're going downtrend, or either you are side trending. Okay. Now, whenever we make a candlestick gives us tails, right? So the way that healthy price action works is, you see this tail, right? Let's say we are in an uptrend, right? This tail, the nature of this tail must be able to be like this. Let's draw an imaginary line here. The other candlestick that comes must be able to fill the area covered by this tail, right? We focus with this tail and this tail, meaning that the second candlestick that comes must be able to also look like this, right? And we focus on this tail and this tail, meaning that the area of this tail is covered by the area of the candlestick of this tail, right? Now, we can also see that when we have scenarios like this, we can have scenarios like this, scenarios whereby, let's say we are uptrending, scenarios whereby this tail, sorry, will, so sorry, I'm drawing a hammer instead of a, will act like this, right? Meaning that we have left an area or a gap here, right? Why? Because this tail didn't stretch far as this to cover this tail. It's not always about tails. You can also focus on the bodies as well. But the inability to cover that gap now here leaves what we call an imbalance. Right. Let me go to my chart and show you something. Right. I believe we can all see my MetaTrader. Is it? Can we all see my MetaTrader? Someone just type yes or no. Okay, I understand. We can see it. I can see yes is there. I can see yes is there. That's okay. Now, let me add a pair. Let me just choose any, and then let me put the normal colors that you guys are used to. Let us put black on white. No, let us put color on white. Yeah. Now we all know that green is up and red is down. So when we talk about yield price action, again, let me repeat. As you can see here, okay, let me add our rectangle 2. Customize. Where is Mr. Rectangle? Here. Okay. Right. So as you can see, this tail area was covered by this tail, right? Meaning that there was no imbalance left. Let me fill in color. Okay. Right. And you can see that this tail and this tail, the areas covered each other as well, meaning that no imbalance was left here. But now, this tail and this tail, they didn't cover each other, meaning that if you come here and touch the tip of that tail, and if you come here again and you touch the tip of that tail, you can see that a clear imbalance was left. Again, if you come here and do this, you see that another imbalance was left. But if you come here, there is no imbalance. If you come here, there is no imbalance. If you come here, there is no imbalance. Right? Meaning that at some point in time, price will have to come and fill these gaps. Right. Now, let's look for scenarios where price acted like that. And let's also try to get points where we can actually target to trade these imbalances, because we don't just trade them. So what you have to do is you have to find your peak or your main reversal point, or your higher high, or your lower low that has been recently created. As we can see, we were uptrending here from the downside going to the upside. Or we're uptrending, I mean, and we reversed here. But the way that we reversed, okay, let me do this. If you look closely, we left an imbalance here, right? Meaning that price had to come, fill it, and then continue in the downward direction. And what did price do? Left an imbalance, came back, filled that gap, and then it fell. Right. The reason why we choose to trade these imbalances at peaks or at higher highs, lower lows, is because, as you can see, even though we created a high here, even though we created a high there, here, okay, let me do this. Even though we created a high here, all right? Okay, even though we created a high here, the move that we had going in a strong downtrend, it also left us with some gaps. But our main focus now is to be those ones exactly at the high, or those ones exactly at the low. Those are the ones that have to be filled, right? So what do I mean? You can even check here. Again, we made another high here. And our imbalance is to be filled at some point in time. So we anticipate that since we have a high here, a low here, a high here, you can see that we have another high here, but it didn't left any imbalance in this time frame that we see. But maybe if we scroll in M15, let me do this. Maybe if we scroll in M15, we can see an imbalance. Is there an imbalance that we can see here? No, there isn't. What about in M5? Is there an imbalance that we can see here? Because these imbalances and gaps, they are witnessed in any time frame. Right. So let's go to M5 for that one and see if there was any imbalance. And I can see there was an imbalance in M5 somewhere here. After this peak formation, we can do this. We can see that there was an imbalance here. And price came to tap in that area and then it fell. Right. So let me go back to H1. Again, you can see that when we created a high at this point, let me zoom there. Here and here, there was an imbalance. So we mark our area. And when price came back in that area, it fell. Again, it gave us another imbalance here. As you can see from here to here, there was another imbalance. So when you mark that area, price came back, tried to tip that point and fell. Okay. But for more clearer results and for a more concentrated entry, now what we do is, let me share my whiteboard. Let me share my whiteboard, okay? What we do is, whenever we figure out that we have an imbalance, all right? Let's say we have a gap here, and this is our gap. Or let me use a more concentrated rectangle 2. Let me do this. So we discover that we have a gap here. Okay. We always want to mark out 50% of that gap. Right. And the way that you can accurately mark that 50% is most probably through a Fibonacci, such that when price comes back in your gap, the moment it taps your 50, then you sell. Or the moment it taps your 50, then you buy, depending on your intended direction. Okay? Sorry, before I continue, are we understanding what I'm saying? Please be honest. Can you just type either yes or no? Are you understanding what I'm saying? Because this topic is a pretty much complex to some people. So, okay. Okay, some people are saying we are understanding, but not fully. Some people are saying they're understanding, yes. Okay. So let me kind of restart a bit so that we understand. Okay. So my saying is we have what you call a gap. And these gaps, they mean unhealthy price action. Because when we talk about healthy price action, your candlesticks must move in this manner. Let me show you on the charts again. Your candlesticks must move in this manner. When we are talking about healthy price action, in the event of an uptrend, you should see a series of green candlesticks. Although red candlesticks come along the way, price should be covering each and every candlestick that comes. Right, let me zoom in larger. A candlestick like this one here is a tail, this tail, and this tail. Right. And now the way that price should move is in this manner. When we leave a tail, we have a candlestick that we have in between. Yeah. Let's forget it for now. The zone of this tail must be able to be the same point or must be covered with the zone of the tail from the third candle. Right. The moment you see that not happening, that means you have an imbalance. Right. So what does this mean? This means that if you come to your chart and if you mark this tail, you can see it was covered by the third candlestick tail. Right. If you come again and you take this as a first candlestick, this tail was covered by the area of the third candlestick tail, which is this one. But as you can see here, if you take this as your first candlestick, it was not covered here. This one didn't come and cover this zone area enough. So that leaves us with a gap. Yeah. Right. Meaning that price is to come at this point, at this zone. You can stretch it out and fill that area in the future and get some type of reaction. Right. But now the problem is if we just target any point, our concept might not work. We want to target this at either highs or lows. It either peak highs or peak lows. At reversal points, which are major. Because you can see here, maybe we came in the future, but we never filled that gap. Oh, we did. But sometimes it doesn't. Right. So if we actually stretch this out from the back, you can see that price came back to that point of the gap, filled it, reacted, and then went up, but it was not for long. So we want to get gaps that give us a more defined meaning. Gaps that gives us a more defined move. Okay. For instance, we are here, right? We were uptrending, and this was our point of a reversal. And we see that when we reversed, we left a gap here. Here. And price came back to that area and fell. Okay. We can also see that when we were downtrending, let's see when we were downtrending, and twist to an uptrend. That's the point that we want to look at. Okay, do we see a gap here? Yes, there's a gap. And price came back in this area. We can see a gap here. Let me show you the gap first. There's a gap here. And then price came back, filled that gap, and then went up. This is based from a larger time frame. But now, remember, our entries are always taken from M15. So we also have to find as much gaps as we can in that small time frame, because that's our entry point and it gives us a precise entry. And now when we talk about M15, we are now talking about what we call scaling down. You can see a gap in a larger time frame, but you have to scale it down to get a more focused entry. And as you can see here, we scaled it down because in M15 the gap is reduced. That's minimizing our risk. So what do we do after that? We mark it 50%, and when price comes and taps our 50%, we enter. Now you have reduced your risk and you enter your trade. Right. So let's look again at some points whereby there's gaps. So let's go to H1. You can even target your gaps in H4, D1, M30, but always make sure your optimum entry time frame is M15. Right. So let's go to H1. What you can see here in H1 is we have another gap here, meaning that price is to come back to that gap. Fill it and then fall. Okay, let's change color for this one so that we can actually relate to the point. Since we have many red zones, we can actually put this one on yellow, right? So let's scale in down to M15. Where is that point we just marked? It's there. Okay. So do we have any gap that we see here? Yes, we have a small gap here. So we reduce our risk, right, by tuning it like this. And we've reduced our entry point. As simple as that. And then we enter. And then what do you see? Price came back, filled it fully, came back, filled it fully, and then came back again and dropped. Okay. Then there's someone who's now asking, okay. Okay, thank you. Thank you. Thank you guys. I see people saying they have now understood. So now there's someone who's asking, where do you put your stop loss when you enter? Where do you put your stop loss? Just because we are at the peak, I always put my stop loss on the previous high. Right. Now, I know that using this method, people say you should put your stop loss where the gap starts or where the gap ends, depending on which direction you are taking. But remember, our gap can get filled 100%, 150%, and then it falls. As you can see here, it was filled 100%. I think it was even filled 200, 300%, and then it fell. But now, us entering here just gives us that opportunity to catch a trade when it's still hot. Okay, So I always put, for any trade, I always put my stop loss at my previous high. That's me. Although some people, they put it just right above or below the gap. Okay. So you can go and research more about these gaps and see how best they work. I'll try to post material. I'll try to post books related to these gaps so that we can fully understand them and get them. So this one, we just need you to go, take your time, relax, find the gaps as much as you can on your charts, and then start trading with them. As you can see here again, we had a gap, we came back, some kind of reaction, some kind of reaction, some kind of reaction. Yeah. And we have another gap over here. Let me show you that this is a gap here. Here is a gap again. Did price react at this point? Let's see. Let's just see if price reacted yet at this point, because sometimes it may not respect the, okay, this one was broken. Okay, that gap was broken. But before this gap came, there was this gap here. So let's focus on this one here. Was there any price reaction? Yes, but not full. It just reacted and then broke. So sometimes these gaps can break, can get broken. You can put 100% trust on them, but I don't put 100% trust on them because this is trading, right? Any kind of manipulation move can happen at any time. So yes, sometimes you don't expect to see 100% reaction on these gaps, but you're saying 90% of the times there is reaction and a more smooth and defined move. Okay. I hope we are understanding there. So, um, for this morning, I think our Zoom session is done. What we can do is I'm going to open our Telegram channel so that we talk and find best ways we can answer each other there. But if you keep this concept in mind, you will never go wrong. You just need to master it. Just need to master it. So thank you guys for joining this morning. Let's go to our Telegram channel. Let's ask questions. I will happily respond back to you. Thank you a lot.